From Deloitte Tax, welcome to the Tax News and Views podcast. In this series, we talk to specialists from Deloitte about the latest business issues and developments. I'm Carrie Falkenhayn, your host for Tax News and Views, and today's discussion is part of our new series on Pillar 2. Pillar 2, which is part of the OECD Inclusive Framework, will have major implications for multinational corporations around the world. Today, we are covering the data needs for Pillar 2 modeling and compliance. And joining me today are Ryan Duchesne and Brad Ford. Ryan is from Deloitte's International Tax Quantitative Consulting Team, and Brad is from Deloitte's Tax Technology Consulting Team. Welcome to the podcast, Brad and Ryan.
Thank you for having us.
So I'm going to just cover some quick background for our audience before we launch into it. Pillar 2 is one of the key components of the OECD Inclusive Framework. And when you talk about Pillar 2, you often hear it referred to as the Global Minimum Tax, or GLOBE. And those rules introduce a very complex minimum effective tax rate calculation focused on a specific new rule set. And so integrated modeling will be important to assess the potential tax exposure that an organization has from a Pillar 2 perspective. And so before we get into the data needs, Ryan, maybe you can talk about or just give us a brief update on where Pillar 2 stands today.
Sure. Thanks, Carrie. It's been an interesting several months. Really, things picked up steam around December when we got EU unanimity on Pillar 2, which effectively meant that all of the jurisdictions in the EU agreed that they would pass Pillar 2 legislation before the end of 2023, with the intention of it taking effect in 2024. So that was a big step forward. We saw our first jurisdiction pass actual legislation, which was South Korea. They passed their law in December. And then we got a lot of information from the OECD in December, and then another package in February. First, we got the Globe Information Return, which is the return that taxpayers are going to have to complete with respect to the Pillar 2 taxes. We got some information about some transitional safe harbor calculations, which have become a big deal for our clients to evaluate now. There's some calculations that should help taxpayers stay out of Pillar 2 or stay out of the full Pillar 2 rules for the first 3 years, meaning 2024 through 2026. And then we got additional guidance on some thorny technical issues in February that resolved some issues that we had some questions on.
So lots of recent updates. Ryan, maybe just summarize what the impact of all of this is before we get into some more specifics.
Sure. As you mentioned, Pillar 2 is a big part of what the OECD and the Inclusive Framework are trying to accomplish. The general goal of Pillar 2 is to ensure that large multinational enterprises are paying at least 15% tax in each jurisdiction that they operate in. And so this is a new way of thinking about tax, a global way of thinking about tax. As part of the process, the OECD has built out pretty robust rules. So historically, tax professionals have had to go from book income to taxable income in each jurisdiction. Now they're going to have to go from book income to globe income, which has a whole series of adjustments that we're going to need to think about. Similarly, in order to figure out whether we're at a 15% tax rate or not, we're going to have to start with our book tax expense and make a bunch of adjustments from there too to get to our adjusted covered taxes. So pretty complicated from a technical perspective to do these calculations, certainly difficult from a data perspective, requesting data that tax departments historically have not needed, or at least at the granularity that they're being asked for now. So a bunch of challenges coming down the road. Fortunately, we've got a little bit of time to prepare. As I mentioned, these are going to take effect starting in 2024. But that time is passing quickly. And so I think taxpayers are trying to move to prepare for their 2024 requirements.
Thank you for that. And Brad, maybe turning to you, what are you seeing organizations do to prepare their businesses for these requirements?
Yeah, no, perfect. Like Ryan said, the clock is ticking away on us. So when we jumped into 23 here, when the calendar rolled over, it seemed to, after the OECD established their rules, the companies started to come up for air on the topic and really start to want to dig in and address, how to move forward on this and kind of prepare for not only the liability that's coming in 24, but also the external reporting and audit requirements that are going to be a part of this journey for them. And as such, a couple general themes have risen to the top as part of that. First and foremost, if Pillar 2 is the hottest topic within tax these days, within that topic, safe harbor is the hottest topic within Pillar 2. So first and foremost, clients are trying to figure out what information, what kind of things are needed to get through their safe harbor calculations. As a good example, the country by country reporting is fundamental filing to how you interact with the safe harbor calculations. So a lot of attention is being paid to both safe harbor from a modeling perspective, but also from the data needs, starting with the C by C. And then from there, they're carrying the conversation in one of two ways for the most part, either immediately going into modeling around Pillar 2 itself to establish the liability that's going to impact the company, which really is helping them narrate a story within the company about what the potential impacts of Pillar 2 will be so that they can deal with it either from a business planning perspective or from a data needs perspective, and as well as, setting expectations to the C-suite. And then the other area of focus coming off of the safe harbor world for some companies is kind of the data and process assessment. So we're going through deep dive working sessions. The OECD did a very good job of putting out enough detail around the rules and with the calculations that came out with the forms, right, that we can see what information is going to be required as part of this. So we're helping a lot of companies go line by line and then deep dive into all the new requirements. Tax is very good at self-employment, and this is no different. So we'll have new tax adjustments, right? They call them globe adjustments this time, that need to have information so that we can prepare those calculations. Again, Safe Harbor has details that need to be collected. And a good example of that would be payroll, right? Payroll is something that, of course, means something different for Pillar 2 than it does for us traditionally. So, including wages, benefits, contract labor, like where do we find contract labor in a P&L? So data or modeling are kind of the first two steps. And then from there, clients are trying to figure out how to put a roadmap together and getting support within a company to go tackle the gaps that we identify as either one of those two processes.
Okay, so you've alluded to a number of new types of data. Maybe take us a little bit deeper into that.
Oh, yeah, perfect. So data, my favorite topic. 3 buckets, essentially, of information that are needed. I'll go from least concerning to concerning, I guess, from my point of view. So company data, traditional information, especially for U.S. headquartered companies that have had U.S. on foreign taxes in the past, right? We need things like EIN numbers and ownership percentage and different things like that, right? So company information as a static item, influenced by acquisitions and mergers and all that type of stuff throughout a calendar year. But we need that company information. So that's bucket number 1, get that information passed into the Pillar 2 process. The second one would be, I mentioned before, right, the book data. So we have new globe adjustments. We have information that's needed. So working with our accounting colleagues to go get the right level of information pulled through so that tax can do traditional calculations and stuff is going to be bucket number 2. Definitely working with your providers, right? We have good list on what all that information should be. But the new one that comes along with these compliance burdens is the third bucket, and that is tax data. And what's unique about Pillar 2, right, is the calculation starts with current tax expense and deferred tax expense, right? It's on total tax. So we need deferred information to go into this process for a compliance calculation for the first time. So whatever the provision process looks like, we've got to go make sure that that is robust enough to handle the data needs as part of this journey. A good example would be gross deferreds by entity, by adjustment, by country, right? So how are we going to get that information gathered through something like a provision tool, pulled together, and then ultimately pass that information downstream into the Pillar 2 calculation? So kind of the 3 buckets there: company data, accounting, finance information that has to be gathered working with the rest of the company, right? And then that provision information coming out of our tax software would be the third bucket.
So clearly lots of data needed. It also sounds like these calculations are going to be complex. Ryan, what can you share with us in that regard?
Yeah, I think there's a couple areas that are creating complexity around the calculations. One is just how difficult it is. They're building effectively a brand new tax structure here. And so there's a ton of technical to be analyzed. We've got several hundred pages of guidance at this point from the OECD, and that's certainly helpful. But I feel like every day I'm talking to clients, we're understanding that client's particular facts, and it bubbles up a new technical issue that is unresolved or that feels gray when you look at the model rules and the commentary and so forth. And so I think that's the first part, is companies need to get their arms wrapped around what their technical issues are and start to have a view on that. Then I think one of the places that people have to make some decisions is around how am I going to do these calculations? So I think a lot of clients are using firm models. We have developed a model specifically to do Pillar 2 calculations. It's very robust. It's got a ton of inputs to deal with all the data that Brad mentioned, and it's dealing with all the technical issues. So, I think companies have to make a choice about, am I going to develop something in-house? Am I going to look to something external in order to be able to do these calculations? And then how do I make sense of it all, right? So I think that one of the challenges we're running into here is that in order to be a good Pillar 2 practitioner, you really need to understand tax provision information. You need to understand a provision really well. You need to understand complex international tax calculations. You need to understand data, and you need to bring that all together. And so clients are having to figure out who's going to be responsible for that. And in a lot of cases, it's not one person, right? There's not a lot of people that are able to do all those things well. So it's really, who's my team? Who's my Pillar 2 team that's going to work on leading this and really work hard between now and I think about Q1 of 2024 is our first big deadline. Who's going to work on that between now and then to make sure we're ready to do these calculations?
Got it. And Brad, maybe you can tell us a little bit about what the data sources and technologies that will be able to be used for doing some of these calculations.
Yeah, this is always the question that comes up too late in the game, typically. So if we think about the full journey, right, we started this conversation a year ago talking mainly about what would Pillar 2 compliance look like, and everybody's very focused on that. And then we kind of jumped backwards and said, okay, now we have safe harbor. We got to get through that and figure out what our liability is. And we kind of skipped the stuff in the middle, right? So there are a couple key process systems type things that need to be paid attention to as part of kind of putting together a full roadmap that goes from safe harbor all the way out through compliance. And a couple of the big ones that are obvious, right? We need data from upstream, from ERP systems, right? Financial systems, SAPs, the Oracles of the world, those types of tools. We also need most likely information from subsidiary systems. So like fixed asset data, we're going to need payroll information, like I mentioned before, right? So there'll be sub-ledger type detail, possibly bolt-on type information, like an HR tool where we're going to need information from. But then, as we talked about before, if we don't have a good provision process in place, then we're going to struggle with getting data pulled together. So if like provision for several hundred entities or even 10 entities, if they're global, right, are done in Excel today, that's probably going to be problematic if you have to deal with Pillar 2 as part of your close cycle, right? You're not going to get an extra day in close to deal with Pillar 2. So we've got to find time in there. So we've got to automate things around the current provision process. And so if you're in Excel, most likely an easy way to do that is to get to a provision tool. But those provision systems are going to be important. And then if I had to put one more out there, actually two more. Ryan mentioned the models, right? I definitely think firm models make a lot of sense in the short term here. Just got QDMTTs and different things coming. There's going to be a lot of law dropping over the summer. It's going to be hard to keep up with all the little nuances. And at the end of the day, the nuances will matter for the next year as you get a handle on what Pillar 2 means. So, getting the right tool set to do the modeling, and then ultimately, how are we going to get this posted all the way out through the consolidation softwares? Another good example within that is, are you going to use local GAAP for like C/C reporting that lands into your safe harbor? Are we going to use consolidated US GAAP for our US headquarter company, right? Like those kind of decisions, it could be very important what consolidations mean and reconciling everything back. So kind of end to end, I think those are the tools that are going to be impacted or utilized as part of the process.
Got it. Well, thank you, Ryan and Brad, for that update. Clearly a lot to consider from a data and calculation perspective as organizations prepare to implement these rules As I mentioned, this is part of a series where we're going to focus on various aspects of these new Pillar 2 rules, including the safe harbor that Brad mentioned. So I encourage our audience to look out for our other episodes in the series. In addition, you can go to Deloitte.com or download the Tax at Hand app to get additional information. Just search on Pillar 2. Finally, you could also connect with Brian or Brad directly via LinkedIn. But in the meantime, I'd like to thank our audience for listening in, and I hope you all continue to be well until the next time.